Franks from the Franks Report, the founder and creator. I figured I'd have another sit-down session to talk about things away from the charts. This is a series I started to, break away and encourage other retail traders to break away as well, and just share some knowledge, talk about things. We don't have to get so heady and chase down a lot of these larger terms, things like that. Just kind of have a casual conversation about trading and best practices and things like that. So, no suits, no craziness, just regular people talking to regular people. And last time we talked about the importance of stepping away from the charts and reducing stress and things like that. And I think another aspect that we should probably touch on, aside from partitioning your time, being more effective and managing stress, is another good technique that has nothing to do with analyzing or anything like that we should talk about, is how do you reset yourself? That's something that even successful traders sometimes struggle with, because let's say your trades are going doing well, whatever, and then the market turns against you, and now you're angry, you're upset, and you're questioning yourself, questioning what you did, and when really that's just the reality. Trading is risky, and we're not fortune tellers by any means. We just go with A+ setups and utilize best practices, and understand some of the macro level things that touch on the market. So having a method to bring you back, to recenter you, is crucial, because the market continues on with or without you, every day. And the faster you can get back to your A game effectively, the better off your long-term strategic goals for trading or near goals, whatever it be, will be better for you. I know a lot of popular retail traders will talk about meditation. They build that into their day, and to sort of recenter, refocus beforehand or afterwards or what have you. That is a good thing. That I think taking some time to just recenter yourself, whatever that is crucial. Meditation is obviously a good one. It works for some people, it doesn't work for others. So you have to identify what is your tool to bring you back to center, to reset you and bring you back to your A game. Maybe it's watching a movie that makes you laugh. Maybe it's watching funny reels or shorts on YouTube or Facebook or whatever it is. Maybe it's going for a run or lifting weights at the gym. It could be a combination of things. I know for me, it depended on the severity of the setback, right? Like, if it was something completely unexpected in the market, there was a flash announcement from the White House or something like that, and it had a pretty tremendous impact on the market in that moment, and I was already in a position or something, then you have to use a tool that best matches the problem. And you can use small band-aids, like watching stand-up comedy for like, oh man, that was dumb, I shouldn't have done that, to like, look, I need a full-on recovery plan. I just completely took a huge loss here, or this is going to set me back a week from what I was trying to achieve, track down. So you got to find those out. You got to figure it out. Outside of those tools, well, let me go back. Even if you have good strategies and kind of identify certain fluctuations or movements in the market, if you don't have the mental edge to see it through or to stick it out, to continually use it, then you're going to lose more often than not. Either you're going to quit, you're going to leave trading altogether. You're going to start revenge trading, which is terrible. You never want to do that. So you need to figure that stuff out. So let's transition into some of that mental stuff, such as revenge trading. Revenge trading is terrible. I can tell you till I'm blue in the face, don't do it, don't do it, don't do it. But sometimes traders will make a mistake, or they execute a trade with poor timing, whatever the reason, and all the sense goes out the window. And it's understandable because it is not just psychological, it's physiological. When your emotions run high, the frontal lobe, where you do all of the thinking and analyzing and processing, it gets hijacked by your emotions. It's just biology. And you have to be able to recognize that and know when that's happening to you, so you don't do stupid things, just to be blunt, like revenge trade. And for those who don't know what that is, it's basically you are having an emotional reaction to something in the market, usually because you just lost a trade. And so you over leverage. You're like, well, let's go big or go home. I'm going to get all my money back, or whatever it is. And more often than not, it leads to additional loss, which further fuels that emotional outrage you're having and more revenge trading. Next thing you know, you hit your drawdown limit, your account's being liquidated, whatever it is that's happening to you. So having tools that can help you reset, and two, recognizing the consequences if you don't, are pretty important. And you just gotta figure that out. And I think the easiest way to figure out your tools is what makes you happy. And the less friction there is to accomplish that, the better the tool is. You can use it anytime, anywhere kind of thing. As far as the next phase, like with the revenge trading and things like that, and getting hijacked emotionally, you have to identify what that feels like. So when you know it's happening to you, you can stop. And you can actually program in some fail safes for you. So like, if you're just the kind of person that just sees red, then you can actually build into your, your broker or things like that, a max loss, so that if you say, hey, if I lose $1,200, $1,500 today, $500 today, whatever it is, then lock me out of my brokerage account. And what that does is you've made that decision while you're sane and before you start trading. And what it does is it keeps you from continually trading. If you know that you can't control your anger or emotions or whatever, having something like that in place is really smart. It just protects your account, things like that. Because before any profits, the number one rule is make sure you preserve your capital. Preserve your capital first, and make profits second. If you're doing it the other way around, I can almost guarantee that you are going to liquidate your account, because that's just not the way it goes. You have to preserve your capital, right? You have to build those buffers, whether it be a profit buffer, some kind of mechanical buffer, lock on your account, or just if you're able to self-regulate yourself. But having those pre-programmed hard locks, I think, is a great strategy for retail traders, especially those who are first starting out. If you have more experience, then you can lift those out, because hopefully by then you have a better idea of how you react and how you behave and things like that. So you can say like, okay, yeah, I lost this, but there's an opportunity here, and I need to jump on that. If I would have had the lock on, then I would have had to sit and watch it happen, and I'm just done for the day. So it's a personal choice. I think that it does more good than harm, and I think most people should probably take advantage of that, especially beginner retail traders. It's a good habit, good technique. You could even set them for the week, daily, weekly. and not just loss. You can also even set profit goals. Let's say like you're like, hey, I'm just looking to make $500 or $1,000 today, and once you hit that, you're done. That way, it keeps you from giving money back to the market. There's nothing worse than being ahead and having profit, and then you make one more trade for the day, just one, and you end up giving part of it, all of it, back to the market. And you're like, had I just stopped, I could have been ahead. And that's something else that's hard to swallow. It can lead to revenge trading, and it's just a vicious cycle. So you need to have a understanding of yourself and how to regulate yourself, and just best practices. Like I said, have tools to reset you in the moment or later. Well, both really. The easier they are to implement, the more successful and the better tools they are. And finally, being able to recognize when you're in that bad place, such as revenge trading, so that you can stop yourself, so you can use those tools. And it may take a couple times for you to figure that out. You may have to make some mistakes, unfortunately, and some of them may be costly. But think of it as R&D research that you've paid into to learn more about yourself, so that you can become a better retail trader. That would be my thought on that. So, yeah, I mean, these are things that, they really don't talk about, I guess, in textbooks or whatever. I address it in my book, but, most gurus or whatever you want to call them, they're trying to sell you on some kind of indicators or, some kind of template or some kind of trading strategy, but you can have 1,000 strategies and 1,000 indicators. If you can't self-regulate or, get your head back in the game, it doesn't matter. It doesn't matter at all, because you're just going to blow up. You're going to blow up your account and your own mental health. So these are important lessons. I think they're just as important as anything else, because it starts here first, and what you do after that, that's what happens. But you have to master this first. So hopefully that's helpful. It's not something that I think enough experienced traders talk about. They're going straight to the offering you tools and solutions, either because they have something they're trying to sell or whatever. We all know why, but I think that's something that we can talk about here. Want to kind of let our hair down, things like that. Yes, I too will. I have tools and things like that. I write articles to help retail traders and things like that. A lot of it's for free, but at the same time, I'm a real person, and that's why I can sit here in t-shirt and jeans, no suit. Yes, I was, yes, I have certifications and licenses and things like that, but in the grand scheme of things, it doesn't really matter. Let's just be honest and talk about these things. So for those trading, it is risky, so be careful. And best of, it's not even luck, because it's not a gambling thing. Just be smart, use A+ setups, and take control of yourself so that you can be successful. All right, well, I'll catch you on the next one.